Hi, welcome to the Capital Region Skinny from the Greater Capital Association of Realtors, where we dig into the most recent numbers from our market. It's election season, so it's only natural to feel overwhelmed by advertising, speeches, and media buzz. Let's see if we can turn one of the signature electoral traditions, the moderated debate, into a useful housing dialogue. Ladies and gentlemen, on the right, please welcome Mr. Seller. And on the left, we have Ms. Buyer. Candidates, please state briefly why you feel the market favors your side.
Buyer activity was up 22.3% to 707 pending sales. Buyers have shown strong turnout all year, and that's helped ease some seller anxiety.
I agree that sales have been strong, and that's good for sellers. But mortgage rates continue to post new record lows, and prices have come down slightly in the capital region from the high point of 2008. Buyers definitely have the upper hand.
Moving on.
Oh, and one more thing. Rents are on the rise.
Okay, thank you, candidates. And now, let's talk about inventory. Ms. Buyer, you start this round.
Well, this has been a dominant pattern for most of this recovery campaign. Some buyers wish there were still an oversupply of bargain homes to choose from, but that's quickly changing. Inventory levels were down 13.7% to 8,314 active listings.
That's something my opponent and I can agree on, and it's the lowest September inventory reading since 2009. It's also the 10th consecutive month of declines. This means less competition for sellers, which typically translates into multiple offers for well-presented homes and higher prices as well.
Candidates, that provides a good segue to prices. Mr. Seller, please go ahead.
My party has been hesitant to list because of what's unfolded over the past half-decade, but the pendulum is shifting. The median sales price was up 8.2% to $203,500 in September. That marks the 8th consecutive year-over-year gain.
I think buyers recognize that and feel a sense of urgency as a result. There are still bargains to be had, but prices have firmed up significantly in 2012.
We will conclude with absorption rates. Ms. Buyer, please begin.
Absorption rates were down a significant 25.9% to 11.8 months. Now that's a long ways from the 16-month supply we had last year, but this number is still technically leaning toward buyers.
That said, this measure is being driven lower by dwindling supply and rock-solid demand. Sellers are also seeing multiple offer situations becoming more common. This means they should yield a greater percentage of list prices.
And with that, we'll conclude the debate. Remember that mortgage rates are near record lows, the economy is slowly on the mend, prices are on the rise, and the market is returning to a healthy balance. On behalf of the Greater Capital Association of Realtors, good night and good luck.